Alright, let's have a look at this step acquisition then. As usual, we're going to kick straight off with S's equity table. So no change there. Year end, acquisition, post acquisition, stuff we're really happy with now. So first thing would be just have a look what's in equity. There it is, just share capital and retained earnings in these simple examples. S's figures at the year end were 100 and were 18260. You presume it was the same at acquisition for the share capital. Now we need to know the retained earnings at acquisition. It said we acquired 30% of S 10 years ago, but that means it wasn't a subsidiary, so we didn't acquire it yet. They acquired a further 60% 5 years ago, so that's when it became a subsidiary, and so it was 5 years ago. So it then goes on, I want the retained earnings, don't I, 5 years ago. The fair value of its net assets 5 years ago was that, and its reserves were that. So there we go, the 5408. One minus the other then will give me a post-acquisition of 12852. So far so good. Then I add those up, don't I, as normal. That would be 5508. That's the book value of the net assets and equity. I compare that to the fair value there of 5814, and that means I've got a fair value adjustment of what, 306, I think. So 306, I need to know what it's caused by. The difference between book and fair value is caused by PPE, as it normally is in my questions. So 306, depreciation over 10 years, it says. How long ago did I buy it? 5 years ago. So the depreciation would basically be half of it, wouldn't it? So it would be 153, leaving me with 153, and I need to go put that 153 onto S's PPE, which in this case is here. So far, so good. I can now add down the post-acquisition, and that comes to 12699. Right, moving on then. Goodwill. This is where it gets a little bit tricky. Fair value of consideration. NCI, I'm not sure if it's the fair value method or the proportionate method. And the fair value of net assets acquired, well, I do know that, 5814. So, I'm looking for NCI. Does it tell me what the fair value of NCI? It's using the proportionate method. There you go. So, proportionate NCI. So, by the time it was acquired, we therefore had acquired ourselves 30% plus another 60. We'd acquired 90%. So, therefore, NCI is 10%. 10% of the 5814 is 581.4, isn't it? So I'll call that 581. The fair value of what I paid for it then, I'm going to make a bigger thing of this. So the fair value of what I paid. So what did I pay? The first thing that I paid was 1,800, and then I paid 4320. So I paid 1,800, and then I paid 4320, and this was 5 years ago, and this was 10 years ago. The date of acquisition is 5 years ago. I want the fair value 5 years ago, so the fair value of this bit when I bought 60%, remember this is when I bought 30%, the fair value of that 5 years ago was obviously 4320, because that's what I paid. But I want to know what is the fair value of 30%, not 10 years ago, but 5 years ago when I bought it. What was the fair value then? And it says the fair value of the original 30% at this date was 2124. That's the figure I want then. So I need to just add those two together, which gives me 6444. So let me put on 6444. Add it all down, and that will give me goodwill of 1211. I now want to check if there's been any impairment yet, and it says it has been impaired by 133. So I take off 133 and I just add it down, and I get to about 1078. So goodwill is 1078. So turn that into goodwill of 1078. So far, so good. Keep on going then. Now, I just want to go back to this, look. This difference here. H has made a gain, okay, because its 30% was worth 1,800, it's now worth 2,124. It's made a gain of the difference which is what, 324, and we put that gain to H's retained earnings. So I'm going to do retained earnings straight away. Doesn't matter which order I do it, but H's retained earnings then, I want all of that, which is the 48860. Then I want to add on this gain on the step acquisition. So gain on the step acquisition of the figure I just calculated there, the 324. And then I don't want all of S, I just want my share of S post acquisition. So I need to go to my post acquisition here, 12 at 90%, isn't it? So 90% of that 12,699 will give me more or less 11,429. Okay, 11,429 minus any impairment. Can you remember impairment when it's proportionate NCI? The impairment all belongs to the group. So I just take off the full, I've forgotten what it was now, 133. Yeah. Take off the full 133, add it down then, and I'll get my retained earnings of 6480, and I can pop that in, 6480 for my retained earnings. I'm missing now NCI, so let's go and do my NCI. Should be relatively straightforward. At acquisition, same figure as I used for my goodwill, 581. Plus post acquisition, so I need to go to my post acquisition column. Okay, and it's going to be 10% of whatever's in my post acquisition. Yeah, so there's the other 10%. So 10% of 12,699. 10% of 12,699, I'll call it 1270. No impairment, because we never have an impairment of goodwill when we do NCI proportionate, because they don't get their share. So we just need to add those together, 1851. And so if I pop that in, 1851, it should then all look like balancing. So 1851. Share capital is a holding company only. Add across all of your assets and liabilities. So that comes to 61,353, and it should all balance.